Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your Tuesday edition. Sorry about yesterday. I told you last week I had a dentist appointment on Monday, and because I did so much grinding away on my face, I didn't think I'd be able to do a show Monday, but I forgot to remind everybody on Friday. So if you're ever curious about shows, I will do updates on my X or Twitter handle, so you can always check out TraderMerlin there if I make any updates, etc. So sorry about that. It wasn't as bad as the first side. The second side was definitely much easier, but at least the teeth are starting to look a little nicer. Self-improvement is a darn good thing. All right, let's start off with the topic du jour, seeing red. Now, yes, I know that there was a lot of things that were actually up today. Hey, Big Eb, hope you're enjoying a nice cocktail on the beach down there in Mexico. Have a fantastic time with the family. I'm jealous. Next time I'm getting an invite, I'm going to just show up randomly. I'll just pop into your resort like, I'm here. Nobody wants to see Merlin in a Speedo. No, I'm telling you. Anyway. Show 1181 today. Seeing red is the topic du jour, and it's not just that the markets are seeing red. I'll bring up our top here so we can look at kind of the big eight. The S&P wasn't that bad. It was only down 0.53%. You look at the Russell, it was down 0.73%, so not bad. But then you look at the NASDAQ, and the NASDAQ really is the one that took a brunt of the force today, specifically because of tech and AI, as President Trump ramps up his talk track rhetoric against the chips and, maybe going a 200 to 300% tariff on it. And then also, putting a 20% tariff on Taiwan. And it's being problematic, we will say, for tech firms. And I think that they're kind of looking for clarity and they're not getting it. We talked about this the other day with Justin and any other guest I have on the program, which is, it's interesting how this entire market rally was really led by these Magnificent Seven. And as long as tech continues to plow forward, we should see significant market gains ahead. However, that train not derailed, but certainly had some struggles today with regards to the Magnificent Seven. So here we have NVIDIA. You like breadth indicators? I never really liked breadth indicators. I will try to incorporate those into the show. Not a big fan, but yeah, Big Eb. Trump and clarity right now, that seems to be the MO. Let's just keep them confused. So since I had the Magnificent Seven slide up here, let's dive into those and work our way from the bottom, because to me, this is really the crux of why we saw the markets do what they did today. Start at the bottom with NVIDIA. NVIDIA's essentially erased 2 weeks worth of trading gains in one candle. Now, it's the largest candle on our screen by far, and I certainly don't think that this is the end of NVIDIA, but a lot of people really speculating that NVIDIA could be in for a bit of pain if these tariffs on chips get higher, if Taiwan's issues continue to mount, and people dumped NVIDIA today. So you had a 3.5% slide in NVIDIA on the session. I forget why I had the 175 mark. That was Big Eb's line in the sand he drew months and months ago, which we've surpassed significantly. I guess the big question is, does this continue? Do we start to see more sell-off over the coming days? And it would seem to me that the logical course of action would be to just simply draw in some supplier demand zones or areas where you think are relevant, like this level right here on NVIDIA, between 170.89 and 174.09, and start finding areas that might act as a backstop, right? And that, if it doesn't hold, then you're going to have to start drawing more zones that are even lower. There's this gap which was already filled that goes all the way back to July 14th. That's another step below this, which would drop it about another $5 per share, taking it to 162 to 165. So it's not looking great right now. I think those of you who are long, and I see a few of you here are long, your main objective or main anticipation is that this level right here below NVIDIA, right below where we're at, a few bucks below. Right now, the low point on NVIDIA right now is 375.64. The top of that zone is about $1.60 away. So if we hold that, that's probably fairly good. My guess is this is going to be just kind of a shock factor Tuesday type of thing, and then we'll get back on track and rebound. But an ugly day for sure, and it wasn't just NVIDIA that had a kick in the teeth today. Meta took a 2% slide. Meta probably, in my opinion, is a little bit more concerning because when you look at Meta, there's this big gap, right? This candle right here on August 1st, its low point is 745. Well, before that, you had a closing price of 708. Now, granted, there is a one-day window that we're capped up even higher, but that's a significant 37-point move right there, that if it gets down below 745, it does feel like it's going to want to start to close this gap. So we got to be real careful there. I'm optimistic, but boy, if we get some panic selling, we could see some pretty big down moves for the next couple days, which I see some people here already talking about how it's, are we talking about, 1 second, Les, are you talking about today's volume for my microphone or today's volume for the market? Just making sure my volume, okay, good. Just check my microphone real quick. So let me add in volume there. Volume, even though, no, I did not sell any puts today, Margaret. Didn't sell any puts today. Even though we had a pretty significant down day, at least it was only 2% for Meta, the volume isn't really any higher than normal, right? Not that big of a deal. My only big concern here is that this momentum starts to pick up steam. However, my gut tells me that what you're going to get is people buying these dips, especially on NVIDIA. Now, does it go a little bit lower? Possibly, but I don't think there's any real reason to panic. Look at Tesla's chart; it was down 1.75%. You look at the trend; it's still been going up since early June. It looks okay, even though it's Tesla. Amazon, you had a 1.5% slide today. Still looking better than NVIDIA. From the perspective of NVIDIA is kind of right near a big sell-off point. Whereas Amazon looks like it just had a nice big rally, maybe close this gap around 224, and that should be about it. Your Microsoft down 1.42%. This is another one that we talked about last week and kind of where might it retreat back to. And it's literally in the zone right now. It's at the bottom end of that zone between 509.44 and 515.53. So not great for Microsoft, but at least it's still holding that level. Now, the good news for anybody here who is looking at things like Microsoft is Microsoft's got all kinds of just clear trend, right? The trend is absolutely beautiful. It's going to be a little bit harder to pick strong turning points, but it looks like there's a lot of areas of small demand on Microsoft on this way up. So we'll see if that momentum continues. Fingers crossed that it does not continue to the downside. We'll check out Hood here in just a second, Lisa. Google, still looking great. All the other ones have kind of rolled over. Google did not. It was down 0.88%, but really nothing to strike any fear in anybody. The trend looks absolutely fantastic. And finally, out of the Magnificent Seven, good old Apple. So Apple, which, you give $100 billion to the president to say, hey, I'll build some infrastructure in America and you get some preferential treatment, obviously had a pretty significant pop, went from about $202 all the way up to about 200 or 235. So great move there. Giving back just a little bit today, down 0.14%, but that was your best performer. So the Magnificent Seven, I maybe call it the Magnificent One because Apple is just the only one that really hasn't sold off much, whereas all these other ones have had pretty significant moves to the downside. But that's not the whole story. The whole story is, what about the AI route? And so I wanted to go look at some of those as well. The AI route is, like we've been talking about, this market has been lifted up significantly by this AI craze, whether you're talking about NVIDIA or Palantir. And today it was a live by the sword, die by the sword type of thing. Look at PLTR today. Palantir down 9.35% on the day, completely closing that gap that we saw back on August 4th. This one is a bit more concerning because it does have such high volume on this one, right? It's definitely, it looks about twice the normal volume for Palantir. Is A overpriced into stocks? I would say yes, Margaret. And I think I've said this several times before, which is right now everyone's on a buying frenzy. They're rushing to build AI as quickly as possible and get as much infrastructure and buy as many NVIDIA chips and build as many data centers to accommodate all the demand. And I mentioned at some point it's going to get to that level where you're like, well, maybe we have enough already, right? If the demand's not there and we keep rushing to accommodate all this, hypothetical demand, ultimately at some point you're going to overextend yourself on R&D and CapEx. So to me, that I don't know if we're necessarily there yet, but it does feel like we got a little bit ahead of ourselves with regards to AI. Certainly, Palantir is a good example of this. That chart just, oh man, this chart is just so beautiful. Back in 2024, just a couple years back, this thing was $15. Now it's $157, a 10x in a short window of time. If anything, when I look at Palantir, ooh, man, you lost half of your Palantir today. Sorry about that. Looking at Palantir today, I hate to say it, it actually looks like a buy point. you know, if I was to draw a little area of demand on this one, which is not a great area of demand, but we had this kind of drop for one day and then it ripped out of it, you know, I'm looking between 151 and 155. We are currently in the after-hour session down another 1.24% on Palantir, trading at 155.83 as we speak. So, be an interesting one to see what happens tomorrow. I am looking to sell some puts tomorrow. We will see. Yeah, totally, Oliver. It did close that gap big time. So I may actually sell some puts on Palantir tomorrow just because I do like the company. From everything that my friends in the industry are telling me, it is solid, absolutely solid. But again, did they get a little bit ahead of themselves? Did people overprice it in? I have not looked to see what their PE ratio is, but I'm pretty sure it's going to be a fairly high PE ratio. And PE ratio is 578. Now that's trailing 12 months, and they've had pretty significant runs to the upside here. So 578, that's a pretty lofty PE ratio, but that's also, again, from the trailing 12 months. Should be a little bit better now. Lisa, I sold puts on Palantir this morning. Thought it sold off enough and it would turn. Oh boy. Hope we didn't sell too many of them because that thing was just down Periscope pretty much all day long. Here's your 5 minutes of it. It's just real ugly. And it's still going down in the after-hour session, so could be pretty brutal on this bad boy mañana. So hopefully don't get too hurt on that trade. So, yeah, pretty rough. So that was Palantir was a big one. You had even a lot of the chip makers today. So if you look at something like AMD, you know, AMD was also down about 5.44%, down even more in the after-hour session. But again, my main thing is look at the broader trend, and maybe if you want to, you could take a trend line and draw it, you know, from these lows here and see what we get from a trend perspective on AMD. You know, that's not the best looking trend line, but something roughly in there. That looks like AMD could potentially get back down to about 160 before it starts to bounce and follow that trend line. So definitely accelerating in its speed above that trend line, just like Scott McCormick had talked about with the S&P going forward, right? It seemed a little bit of acceleration on that S&P. So, yeah, everything, honestly, Steven, today, a lot of the premiums are good. A lot of the premiums on tech and chips. You know, if you look at just SMH, which is the semiconductor ETF, the whole index was down 2.02%. That's significant, but the trend is real good, right? The trend is still moving to the upside. Marvell, you know, I would be interested in this just slightly lower. Right now, it's at 72.07. That's where it closed at, and you're looking down around that 69 mark. Might actually be an attractive one to jump into, but yep. We know that. Yeah, Treasury Secretary said 90% of high-end chips come from Taiwan and said this is a big problem. We've been saying that. Everybody's buying from TSM, and TSM is the big king. And like I told you about my idea for a Black Swan event, if all of a sudden China takes over Taiwan and says no chips for anybody else, yeah, it's a significant order. Significant issue going forward. And that could be, as I mentioned, World War III cause there. Because chips are what's making this world go around right now. And if we lose access to TSM or Taiwan in general, then what you're going to witness is this S&P just go and down in a big way, in a significant way. They do have factories in Arizona and Washington, so what's the deal there? The production numbers are nowhere near as what they are coming from Taiwan. And they're getting some, I don't know if all those factories are complete yet. I think I've heard mixed things from some people in here that are in the know. But they're building those factories as quickly as possible to get them online to help shift some of that chip demand to the U.S. All right. Whew. What else do we have on that AI tech route? So I wanted to go into a little bit more on the economic details. Of course, we all know that Friday is the big day, right? Friday, 3% in U.S. got TSM. Yeah. Tiny. Well, it wasn't Trump. Don't point it at Trump there, Lisa. Trump thinks a factory can build in a month. Remember, this CHIPS Act that was supposed to build all these factories and give massive subsidies to companies to build, that was done under Joe Biden. So let's go and talk about the big thing for Friday, which is going to be the Jackson Hole Symposium. That is Jerome Powell giving us some clues as to what might be happening with rates. So I wanted to go back and show you my scorecard. I was supposed to update on Friday, but I did not. I've been way too damn busy. Here's our scorecard. And I updated the legend, trying to make it look a little bit better for you. Steven says they've been working on the TSM Arizona for 4 years. It's enormous. Yeah, Stephen, but is it functional? And what, are they 10% operational, 50, 100%? I don't think they're 100%. I think that they are maybe starting to get some production done, but nowhere near what we would need to suffice our demand here in the US. So here is a table that outlines the different components that the Fed is looking at, right? We know it's inflation and we know it's jobs. Now, obviously, there's other components to it, so this is by no means a perfect scorecard, but I wanted to kind of keep track for myself to say, what's the arguments for them lowering? What's the arguments for them to be raising or staying the same? So when you look at CPI numbers, right? The CPI has oscillated from April through August between -1 and 0.3. None of those numbers are high enough to warrant anybody getting fearful. So I put green lights on them, and maybe I should change the 0.3s to yellow, because those are kind of, getting a little bit higher. Yellow, by the way, on your screen here, I will change those now to make it fit better. Yellow on your screen means that is most likely going to cause them to stay the same and not do any change. So we'll make those both yellow, because I think that would be at 0.3%, the Fed's going to hold. But at 0.2, okay, we could lower rates. We could juice the market. So CPI so far looks pretty good. Then you look at the producer price index. Back in April, it was -0.4. Then -0.5. Those are great arguments for lowering rates. Should make those super green. But then we started to rise. In June, we jumped up to 0.1. In July, we were at 0. So I have all of those as green, because those should be factors that cause the Fed to lower rates. And then we got that reading for August, which was 0.9, which is a big red box there, because that was like a one-time outlier that is not a good thing. That could be very problematic for the discussion here with Jerome Powell at the Jackson Hole Symposium on Friday. Then we go to the core PCE. This is the number that they say they are focusing on more than anything else, is that core PCE price index number. April, 0. May, 0.1. June, 0.2. July, 0.3. We're starting to see an increase up in that core PCE price index number. So it's not good news to see it jump, to start increase like this. That looks like the beginning of a trend. It seems like it's increasing about 0.1% per month. And if that trend continues, then August number should be about 0.4. That would probably be a red box for the Fed. Because if inflation on the core PCE numbers is trending up like that, they're not going to cut rates. They may actually start to raise rates. So this could be the monkey wrench in the plans, if you will, of what the Fed is doing, that core PCE. Now you look at the unemployment numbers. Look, unemployment numbers have been pretty much constant. 4.2, 4.2, 4.2, 4.1, 4.2. So that pretty much cements the argument from the Fed that they could lower rates, right? No problem there, lowering rates and stimulating the market, because unemployment looks fine, no big deal. So it's really going to revolve around what this next core PCE price index number comes out at. That number, it should happen next week if my memory serves me correct. Let me real quickly make sure that I'm correct. Yeah, it'll be next week, August 29th, that core PCE price index number comes out. And here you can see what the trend has been. The last 4 months have not been good. They've been rallying up. Now, it seems like every time we rally up to right around 0.3, we come crashing back down. So this is really going to be an important number for the Fed. And of course, Bessent and Powell are putting pressure on, Bessent and Trump are putting pressure on Powell to lower as quickly as possible. But Trump doing the right thing, I'm getting my names confused here. Powell doing the right thing would be to wait for that core PC price index number. If this number comes out at 0.4 or anything higher than 0.4, my guess is you're going to see the rates called off. It's going to be a hold rates at the next meeting. Now, right now, I was supposed to be showing you this. There you go. So if we see this number come out higher than 0.4 or higher, I would contend that you're probably going to see them hold rates at the September meeting. Now, here is the probability as we stand right now. So Bessent said today there should be an immediate, Okay. Let's talk about stupidity and credibility. So, Stephen, I love that you put that in the chat. Bessent, this is your Secretary of the Treasury. To me, it screams of ignorance for someone to demand that we do a 1.5 cut immediately. Could you imagine the chaos that would cause in the markets? the ripple effects would take, 9 months to 18 months to get through, and it could be absolutely dramatic. That's just straight shock. That is so stupid. I mean, it would be an idiotic thing to cut 150 basis points all at once. You would never do that. Now, we've talked with Bill Addis many times in the program, and one of the things he loved about Volcker is that he did, raise 150, 300. I think he said it was 700 basis points at one point. And it was like, holy cow. But the circumstances there, you had runaway inflation. You had to do it, right? You had to raise that much to stop this inflation. There's no reason economically why we should chop rates 150 basis points. Look, I'm on board with 25 basis point cut. Why not, right? Our market seems to be okay. Nothing is that out of whack. None of these numbers are like, oh my God, except the PPI number that came out in August, right? That last week's PPI number is definitely concerning, but it's only 1 point data. My guess is it'll get revised, and when we get to September, which that should happen the first or second week of September, I think it's the second week of September, we get that PPI number, it might come out at 0.3, 0.4. Still higher than normal, but not dramatic. This one at 0.9 is scary. So, for Besson to call for a 150 basis point cut is just moronic. Now, maybe over the course of a year or so, right? If you think 25 basis point cuts, that is 6 meetings where they could cut 25 basis points and do as 150. But to do it all at once, that would absolutely be nuts. If they cut 150, I really want Bill. They won't. Trust me. I don't think that there's a Fed person who would take the helm and agree to a 150 basis point cut. We are not in a... Does anybody feel... Hold on, let me real quickly I'm going to do a poll. Let me do a poll here real quick, and I want everyone to participate. Is our market in a massive crisis? Okay, there's your poll. Fill it out. We got a bunch of people here. So, is our market in a massive crisis? Whether you're bullish on it or a booming market to the upside or a crashing market to the downside, are we in a crisis situation where it's like, if we don't act now, we are in deep doo-doo? I can't. And if you did, so some people have said yes. Those that said yes, type into chat and tell me what that crisis is. What is so appalling to you that you go, we must have an emergency cut or increase, either way, immediately, or we are not going to make it. Our market is humming, guys. And Rob says not yet. Okay, I could agree with that. We will get to one at some point, but are we in it now? Are we in it where it deserves to have our rates cut 150 basis points? Absolutely not. Daniel, COVID 2.0 could hit. And you know what? There will be something down the road, some avian bird flu or some other virus or something. An outbreak will happen again. We all know that. I'm asking right now, as it stands today, can you go out in the market and say, this is why we are struggling. We are in deep doo-doo, and if we don't cut 150 basis points, we're not going to make it. I don't think anybody in here could come up with an argument to say 150 basis point cut, other than I want the markets to rally. That's not an issue. We all want the markets to rally. I'm saying the only way that the Fed would cut 150 basis points is if the doo-doo hit the fan and we were in a bad spot. I think the most I've seen since Bernanke took over was 75 basis points cut in one meeting. But yeah, we're just not there. Yeah. Technician says, yes, we want dip buys. Yeah, hey, you know what? A lot of you are long right now, so sure, let's cut rates by 150 basis points. As a trader, as someone's got positions, love it, bring it on. But it does not make sense to do so. Besides, if you were to cut that much, you would create this tsunami of effects on our economy that would take us, like I say, minimum 6 months, probably a lot longer, to feel the full impact of it. And it could be devastating because it's such a large cut. It would create chaos. So here's what it stands for right now. And this number is changed a little bit since yesterday. There's a 15% chance they're going to keep rates right where they're at. 15%. Oh, by the way, let me finish the poll here since. All right, only about a half of you voted. That's okay. So 93% of you said our market is in a 6% of you said our market is in a massive crisis. 6%. I'm curious. Use 6%. What's the crisis? And it's not a right or wrong answer. I'm genuinely curious. What is the crisis? What is so bad right now that you're freaked out? A lot of people are talking about recession. We could look at the last week's job number, or some of the jobs numbers that came out are starting to show less job creation, which could lead, I said could because we don't know, but could lead down the road to more job cuts and layoffs. 6%, did you understand that? Yeah, I just don't see it. I don't see anything out there that I would look at. I mean, if anything, I'm looking at this market nodding going, and I agree with Bill Addis. I think the Fed's done a decent job. I mean, here we are kind of moving along. Okay, Luis says prices are still high. Luis, you do understand that if we cut rates 150 basis points, that the prices of goods and services will be going much higher? Much higher, right? They will start to spike again. They're now saying they're not going to release jobs numbers. Oh my goodness, that would be ridiculous. Ridiculous. We need the information. Credit card debt. Yeah, I guess all of our credit card debt is certainly a bad thing, but is it a crisis that lowering interest rates would fix? Not credit card debt. That would just go. The people that have credit card debt are, no offense to the audience here, typically if you have credit card debt and a balance that you've been carrying for month after month after month on a credit card, it's a sign that you are not good with your finances. It's a sign that you are not tracking your income, your expenses, your liabilities, and you're making a grave mistake, right? Anybody here who has a balance on their credit card they carry from month to month, forget trading. Your main focus should be getting that credit card debt to zero and paid in full every month. Once you do that, then you can move forward. So that's not a financial crisis. That's a financial literacy issue that I think we should definitely focus on, right? I think that the government should do, since we don't do it in schools, I think the government should actually do financial literacy training. And everyone should pass a test. Keep it zero before using it again. Exactly. Every time, Rob, when I use my card, every time it's at zero every month. And I use my cards for everything for 30 days, paid in full every month, and there we go. It's easy, easy, easy. That's why I say the middle class could disappear if rates get cut by 1.5%. I don't know if it disappear, but we're lowering the interest rate, make housing prices go up. Yes. Not directly, but if you lower the interest rates, so they shorten the short end of the yield curve drops. Typically what happens is when that short end of the yield curve drops, the whole yield curve would shift down, meaning the 10-year, which is the basis for your 30-year fixed rate mortgage, that number would start to drop as well, in principle. But again, that is not a direct correlation. Usually when you lower the short term, the long end will go with it. But depending on supply and demand for our long-term debt, those yields could go higher. And if they do go higher, then the housing price will have some issues. So if you look here at our 10-year bond, it dropped by 0.58%. This, for anybody who's looking at the housing market, is not good. If you're looking to buy a home, it's actually okay because the yields are staying relatively low. But you want to see this get lower and lower and lower, because the lower this goes, the more affordability there is in the housing market, meaning people can qualify for loans. Qualifying for a 7% loan is much harder than qualifying for a 6% loan, especially if you don't have the assets to back you. So the lower this goes, the better it is for the markets. This is more important than the short end of the yield curve. This is not driven by the Fed. This can be done for manipulation. Yeah, Margaret, I saw that too, that descending triangle. The only thing I don't like about this being a descending triangle is right here, what happened on April 7th, 8th, somewhere in there. We broke down below it, so technically not really a descending triangle, but it does have the core components, right? You've got lower highs. The lows are staying relatively the same right now, so this is foreshadowing downside movement here on the 10-year yield, which would be great for the equity markets, which would be great for the housing market, etc. And we'll see. I'm looking to buy a house, but a bit nervous prices in the markets. Yeah, well, the good news, Lisa, if you're going to be holding long term, typically housing prices go up in the long haul. So there we go. So my scorecard, we'll see how this changes once we get that core PCE price index number for August. I think that's the big one. That'll be next week. And then we obviously have Jerome Powell, who will be speaking at the Jackson Hole Symposium. That's going to be Friday at 7 a.m. So 30 minutes into the trading day, you'll probably want to have your TV on and just watching what Jerome Powell says. It'll be interesting. And again, it's going to be rehearsed, scripted remarks, but would like to see what he says about the current state of our market, right? It's been a while since we've had him. I have a house to sell, no mortgage. But don't sell it. You should never sell a home. Never sell a home. Rent it out. Your property taxes are low. You can rent it out, and most likely you can turn a profit and have net income coming in on that one. So I would argue you never want to sell a home. All right, what else I have? So I got through all the topics I wanted to get to. I know there was talk track. People were asking about UNH. As expected, I talked about typically when you have a big jump like this, you'll probably get a little bit of a sell-off. I hope it doesn't close that gap on UNH. But UNH was down just a little bit today, down 1.38%. I'm not concerned about this one at all. I think that UNH over the long haul is going to do very well. So I would just keep, at least that's a lot in property taxes. I guess it depends on the state. Some states have much higher property taxes. Yep, Steven says rent it out and depreciate it. Absolutely. Absolutely. Yeah, so I'm not that so concerned on United Health. I think that the fact that Buffett bought into it for $5 billion, look, you just kind of have to turn your eye to it and just let it go. Just let it do its thing. It'll run. Now, the challenge here, and I think, Steven, you're in trouble on this one, CoreWeave today. Let me turn the volume off on this bad boy. Bam. CoreWeave was down 4%. But again, that's getting caught up in the whole AI tech sell-off, right? Not the greatest news out there for CoreWeave holders today, of which I am down 4.02% and now down almost another 1% in the after-hour session. You really only have one last little ditch stop here before it really starts to fall. And we tailed into that today between $83.81 and $90.24. So does not look great for CoreWeave. And I know you have the 110s. I think you have the 1.5 strikes as well. So that's okay. You bought some puts today's production. Great. And then I guess we'll just run through our top here. Bitcoin. We are at a very precarious moment on Bitcoin. If you look at the price of Bitcoin, I'm gonna draw a line across these lows that we established back on August 5th, which is 113.045, and we are on it right now. We're literally just sitting on that right now. If we get below that, then I think you're gonna have about a $4,000 fall in Bitcoin all the way down to the 109 level. Really kind of surprised to see it do that. I didn't think that we were going to see it break down like this. It's been a very interesting, 5 days worth of trading here. Let me go to the spot market. It's a little bit easier to see. I'll go to that spot market, and you can see from the peak to its bottom today, it's only a 9.47% slide, but that still is a pretty significant run for 5 trading days. Pretty ugly. Yeah. Really kind of concerning, because if you look at, again, where we are sitting, here is the spot price of it, which is better than the future. So let me put a line. I'll put a demand zone on this bad boy right here. And you notice that we tailed into it today, right? And that is between 111,919 and 113,243. So optimistic we're going to hold this, although I'll be honest, I didn't think we were going to sell off this much. I thought we might have stalled right around that 116 level, and we just knifed right through it and went into kind of a free fall day. So not good. That obviously had a profound impact on MicroStrategy, which broke down aggressively today. And this is probably the worst one of the bunch. It's up a little bit in the after-hour session, but MicroStrategy was down 7.53% today. Pretty shocking to see such a big down move like that. But again, Bitcoin was down 2.3%. This is typically what they say a triple leverage, and well, it's pretty much triple. All-time high on Friday for Bitcoin. Yeah, but for now, we'll see. It'll probably we'll see if it turns around. I'm just curious. You look at what MicroStrategy has done since July 16th to where it is right now, from peak to bottom down 27%. Well, that is about triple what Bitcoin has done. So we'll see if we get a nice rally in Bitcoin and get MicroStrategy back on track. But it's going to take some buying. It's going to take consumption. It's going to take some demand in the price of Bitcoin chart to get that thing back up to where it needs to be. And that could be a while. Chad, hey, better than vacation last week. Great, nice. Where'd you go? Hope you did something fun. We got a few of you on vacation. Big Eb's just sitting by the beach having some cocktails already. Man, I'm envious, Big Eb. Envious. AMAT was an interesting one last week too. Yeah, I was looking at it as potential buy point as well on that big gap down. But the only reason I didn't do anything with AMAT is I just don't see it in a demand zone. Right? I was actually kind of hoping we'd fall all the way down about the 157 mark, and yeah, but we did not, unfortunately. Yeah, Oh, cool. Hunting. What do you, never was a hunter. Never was a hunter, but yeah, that sounds like fun. I have some friends that are avid hunters and go all the time. Four U's, huh? Well, talk about a leverage one. Oh, I don't know. You. Never even heard of this one. Energy Fuels Inc. Yeah, 17%, man. Well, this one's a little more difficult to be trading just because of the moves that it has, but you're right back down into those low points from this August 1st rally out. So not bad. Oh, uranium? Okay. Yeah, definitely more of a gatherer. Margaret, I will hunt if need be, but I don't like killing things. I don't like killing anything except rats. Rats, rodents, I got no problem killing those, but I'm not a big animal killer. Funny, I have a friend who, avid hunter. His entire life, he's from Texas. Avid hunter, been hunting his whole life. You guys tell me if this is crazy or not. Hunted his whole life, and then he got into bow hunting. So he, goes out hog hunting and he hunts them with bows. And, bows can be challenging with hogs because they got some really thick skulls. And if you don't hit them right, those tusks come at you. Then he got this crazy idea that he wants to go hunt boar, wild boar, which, by the way, have razor blades off the sides of their faces, with a knife. And you go with a pack of 3 different packs of dogs, like they're catahoulas. One pack of dog will sniff them out, the other ones will chase it, and then the last pack will pin it down while you jump on the hog and proceed to kill the hog with your bare hands. I was like, I think that's a little bit crazy to me. That's something on the bucket list of life. Like, I have zero ambitions of ever chasing down a wild boar with a knife. No way. Nope, couldn't do it. I wonder if anybody in here has done that. That just seems like the ultimate primal, primal urge thing to do. Yeah, me too, Steven. I'm not jumping on that. Typically, there's a couple of different breeds, but Catahoula leopard hounds are typical for that. Texas dog hunting with dogs. I've watched it with friends. Ugh, I couldn't do that, man. Nope. I wouldn't even watch on YouTube. I don't want to see the dogs get hurt. I don't want to see any. No. Yeah. Crazy. But hey, there's all kinds of different stuff for different people out there. And Daggy Kid, I'm sure, I love wild boar. I love eating wild boar. I lived in Italy for, almost 7 years. Wild boar is amazing. Absolutely amazing. Cignale is what they call it. Cignale. That's like noodle fishing. Yeah, I couldn't do that either. Noodle fishing where you take your arm and you just stick it in a blind hole in the ground hoping some giant catfish bites your arm. I'll go to the seafood department at a local grocery store. I don't need that kind of crazy stuff. Oh, nice. 30th anniversary. Nice. Alaskan cruise. Cool. All right. No, that's not true, Oliver. Absolutely not true. Does not taste like chicken. All right. What else do you guys want to discuss? I'm gonna wrap things up. I got to go to the vet, take my dog to the vet, and got to go to the eye doctor. I'm on the health kick. I'm doing all the doctors and eye doctors and dentists, getting everything all cleaned up, getting ready. Got to show my best self. Totally decided discussion distraction, Chad, but that's the beauty of life, right? You ever had dinner with your friends and all of a sudden the discussion takes a really weird turn? It's an interesting but bizarre turn. Yeah. What did Larry M say? A wild board. No, did not know that. Any altcoins I'm looking at, the only ones I've added recently is HBAR. So I bought some Hedera Hashgraph. This is a couple months ago, right before this big rally, fortunately for me. I did buy some HBAR, and predominantly because it's a different technology, and I wanted to expand into things like directed acyclic graph, which is what HBAR is. It's a directed acyclic graph, or DAG, is just a market structure that's a little bit different. Lisa, we briefly talked about UNH. I'm not so concerned about it, even though it's had a good slide here. It may sell off even more. Typically, after you get a monster piece of news like that, it'll sell off as the hype dissipates. But knowing that Buffett's in it, Buffett's not buying that thing, knowing it's a loser. He's going to be there good. Rocky Mountain Chainsaw says, good time for Bitcoin calls. I'm actually thinking more of puts, selling some puts and collecting some premium, because I don't think we're going to go too much lower than where we're at right now. So I might do IBIT tomorrow, right? I might do at the money IBITs tomorrow, right around, let's call it 64, and probably have some great premium for that. All right, so I like Hedera Hashgraph, and then, the only other one which I have not added in has been SWE, but I have not added this in my portfolio. I've wanted to. I do like the tech. Definitely like the tech. Walker talks about Ethereum. Yeah, I haven't bought any more Ethereum. I've already got plenty of ETH, but I do like ETH long term. I think ETH is going to do extremely well, and the main reason for that is the Ethereum treasuries. The more ETH treasuries we get, the more it's going to suck demand. It's going to take shares out of the market or coins out of the market, and then after those coins are out of the market, they get staked, which just increases demand more. So I'll be honest. When you look at this, the long-term chart of ETH here. Let me go and take it. Let's just do a weekly. Okay. So there's your kind of long-term chart of ETH. I have no problem seeing us above 6,000 by the end of this year, which would be another 1,300 points from that top green line there. So yeah, I think ETH is probably going to do really well. That treasury and Tom Lee, now one of the largest ETH holders, I think there's going to be others that realize, oh, I'm going to start a different type of treasury. In this case, Ethereum, because Ethereum is so utilized, that gives it value, right? Its utility as a blockchain. But then you have companies, as I mentioned, are building on top of Ethereum. They're building a layer 2 on top, which creates more codependency on ETH, and now you can stake it. Yeah, absolutely. Absolutely, I think ETH is going to go much higher. Yeah, Ken, the one was called it's Hedera Hashgraph. The ticker symbol is HBAR. This is your weekly. And the main reason, I was actually teaching a crypto class a couple months back, and we'd been in this nice little downtrend. I think actually I got it like right in here, like 16, 17 cents when it started to break out. And the main reason was we were seeing an uptrend go on. I had some money lying around, so I decided to buy some. I bought, I think, $5,000 worth of, I think I have 27,000 HBAR right now. We'll see. I'm not worried about it. It's sell-off here. I think long-term it'll be okay. Hedera has quite a few people as part of its council. Let me show you. Hedera, I think there's 39 seats. They call it the Pioneering Council or something like that. Let me see. The Hedera Council. Let me see if I can show you. So these are the members of the council. So these are the ones that basically control it. You've got Ubisoft, IBM, Google, LG, Dell. Chainlink is a part of this. There's Nomura, Tata Communications. These are all massive global corporations, are all a part of this. So that tells me that they're going to be most likely integrating Hedera's technology into their businesses. And if that happens, that just increased demand on the network and therefore probably going to do rather well. This is more of a controlled, centralized project, kind of like Ripple. I'm not a fan of Ripple, but I don't like Ripple because of what it represents. I'm a fan of Ripple because prices go up. Right? They're going to make the price of Ripple go up over time. So, and I think that would be the same thing for this guy as well. Sol's holding up okay. Sol really was a benefactor to the whole meme coin craze, right? There were meme coins being created on Solana. It looks okay. Nothing exciting, really. It really feels like it's in this gigantic range and drifting a little bit lower. But yeah, I think in the long run, Solana will be okay. And I think you had Tron on here, TRX. Look, I got to be honest, I don't know why Tron is doing so well. Because Tron is basically a copy of Ethereum. I think that one of the main reasons, at least for my hypothesis, is that Justin Sun is just a mover and shaker and doing more things politically around the world and trying to get Tron built into countries, trying to get it built into different infrastructure. And I think that that's fostering some of the adoption for it. So I do own a bunch of Tron, and I'm glad it's moving up because it's been a great push up for my my portfolio. Apparently, Trump team holding it wouldn't surprise me. Wouldn't surprise me at all. The irony is Trump's going after people that have associations with China, and what is TRX? That's a Chinese-based blockchain. And then someone asked about Polkadot. Yeah, I think he said, did you ask me about Dot dead? I hate to say it, it feels that way. I don't even have it on my list anymore. Wow, my Polkadot is delisted. Let me add it to my list here. Let's go DOT. Oh, wait, hold on. I was on P dot. So, yeah, Polkadot does not look good, right? While everything is rallying, Polkadot is just stuck at the floor. And this making lower highs, it does not look good at all. And I've mentioned this before. One of the main reasons I'm unhappy with it is they've done nothing from a marketing perspective. They're not out there pushing for developers and getting people to use the blockchain. It's just kind of sitting here going slow. It does not look good to me at all. And again, I have a decent sized position in it. It's just, it can't seem to get any momentum. And if no one's using a blockchain, well, what's the point? There's a bunch of different ones out there. I think Secret's a good one. Secret is a blockchain that is a great idea, but nobody is using it. There's like no transactions. Well, this thing's just going to go to zero eventually. I did not buy any Secret, but I have a good amount of Polkadot, which I bought many years ago. I wonder if I'm underwater already on this one. Yeah, I probably am. I'm assuming most of my Polkadot was bought eons ago. But yeah, not looking good. Oh, yeah, I hate the project, but I'm riding until the end. Yeah. Well, we'll see. I think that if you get a big market rally, that might be an opportunity for it to continue to move up. And fortunately for me, my position in Polkadot has doubled because of staking. I've been staking for years now on Polkadot, and I've over doubled my position. All right, let's go look to economic calendar and earnings for mañana, and then I will wrap this one up and get on over to the doctor. That's Friday the 29th, but we need to look at the 20th because that's the day that matters. The 20th, Wednesday, brings you a boatload of FOMC members will be speaking. You've got Waller, you've got the FOMC meeting minutes, and Bostic will be speaking, and that's pretty much it for the U.S. other than crude oil inventories. If you look at your earnings calendar, we do have some for tomorrow. You have more retailers. Now, Home Depot reported earnings today. They actually missed earnings, but were up 3%. And then you have TJ Maxx, Lowe's, Analog Devices, Target, Estee Lauder, Baidu all reporting earnings tomorrow. Those are all going to be before market opens. Remember, the retail sales number was kind of not as good as expected. That would lead me to believe that some of these retailers are probably not going to have the best results, but that is it. So that's going to do it for me, everybody. I am going to wrap up for today's show. Hope you enjoyed that one. Sorry about yesterday, but my teeth are almost back to normal. I've got another dentist appointment on Thursday, but I won't be Novocained up or drilled. It's just a couple little pieces, so no big deal. And hopefully I will not miss any shows the rest of the week. So that's going to do it for me, everybody. Have a fantastic remainder of your day. Big Eb, cheers on that beach out there. Enjoy it. Hope you and your family have a great time. Hope all of you have a great remainder of your day. And I will see you on Hump Day Wednesday. Take care.